Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 25th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here's a look at the daily time frame of the ES. Right now, quite a bit of selling pressure here in after-hours trading, and then again another big wave here during pre-market trading. We've seen the market continue to push well beyond and below the previous session's low, and now testing the previous week's close here in the ES. So big time level right now. Again, a failure to hold the previous week's close opens up the previous week's midpoint. That's a little bit lower at about 39.68. Below that starts to open up the previous low back toward 3,900. So a little bit of a pullback here playing out. A bit of a rejection at the previous week's highs over the last couple of days. We could be looking at further weakness here as this thing develops into a downtrending session, especially if price cannot get back above the previous session's low. If for some reason there's a big rejection and we can get back above the previous session's low, then there could be a bullish failed new low with the potential for late day strength. And that's what we've seen a lot of here lately. We've seen some failed new lows in strength, failed new lows with strength. And this market has been able to shake off some weakness here, at least so far in the first few weeks of the year. So if the market can recover that previous low, perhaps there's a bit of a bounce that could come up. But shy of a strong rejection, currently we're looking at further weakness up ahead. We take a look here at the NQ. Big time selling pressure again right after the after hours open here. You also seen additional wave of weakness on the London Open, which was right about the previous session's low. Almost a full-on stop run day right now as this thing has continued to show weakness, approaching the previous week's close price. Through that level starts to open up the previous week's midpoint, and that'll be a bit lower at about the 11,530 level. 11,530 would be the midpoint of the previous week. So again, if it's going to fail through the previous week's close, you're looking at further weakness toward 11,530. Perhaps not all today, but clearly this market right now is showing a bit of downtrending price action that could continue to persist throughout much of the day until a significant rejection is seen. If we take a look here at crude oil, right now, crude oil holding right around the previous year's close price. Previous year's close is right there. That's been about where this market has been. A quick 2-day drop away from it, a snap back to it, and then it's just been chopping above and below that level for a good week now. And if you look at this price action, ever since it hit the previous year's close, it has been sideways in this range. 1, 2, 3, 4, 5, 6, now 7 developing days. So if we start our ADR calculation at 7 days, that'll tell us, let's see where we're at here, right there. Let's go 6 finished, so we know this is at least a 6-day completed range. We have a 7th developing, but as of right now, you can see a push and a breakout to the 125% target would be only 7.8 points, which should be fairly simple for this to do. So we could be looking at a significant breakout from this range pretty soon. As of right now, still hugging the flat line for the year, but definitely building out a nice range that'll take us away from that close into the previous year's low perhaps. If it's a continuation to the upside, then those 8 points could get released to the upside, and we're looking at a move toward 90 at the very least. So again, nice compression here for crude oil as it continues to chop above and below the break-even line for the year, building a narrow range over the last 6, now 7 developing days. We take a look here at gold futures. Gold showing a little bit of weakness, again within range. That's very important because it shows how bullish this market remains. Again, here's the 8-period pivot-based EMA 1918.70. We haven't tested it since the first week of the year. It's been very, very bullish. Again, weakness has been within range, within range, within range, within range. It hasn't been elongating through previous lows. So that's a bullish tendency. That would suggest, again, either price kind of holds here today with a loss, or perhaps finishes much like this day or this day, where it finishes near the upper end of the range with a tail. Overall, we're still seeing further strength to the upside, likely toward 2,000, as long as price continues to hold above 1,900. Another narrow range that is developed with an upward bias here. So if we get any kind of failed new low, that could be the jumping off point for another primary move to the upside. So this thing continues to be a buying opportunity on dips until proven otherwise. Lastly, taking a look here at the YM, down about 0.8% right now, still above the previous session's low, whereas the ES and the NQ well beyond those previous lows. The YM is lagging in its weakness here today, mostly a 3-day narrow range that has developed. This 3-day narrow range is developed within a developing 11-week narrow range, which means at some point here we could be embarking on a 2 to 3 month trending move. So once we get a breakout from this range, could be significant. At the moment, we are directly at the middle of that range, and we are inside a 3-day narrow range at that center. So a bit of buildup that's happening here, but the level to watch here is going to be 33,400. A failure to hold 33,400, and it starts to open up the pathway toward the previous week's low, which puts you at 33K. So 33.4 is going to be very important here. If it starts to fail through there, it opens up quite a bit more downside. Today we could drop down below 33,500 and find a little bit of strength and bounce back up. But below 33.4, and you start to open up the previous week's low. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.